If you think apartment buildings are the best real estate investment out there, I've got news for you. RV parks are quietly producing insane returns while other asset classes are getting squeezed by interest rates, maintenance cost, and competition. In this video, I'm going to break down why RV park investing might just be the smartest, most overlooked strategy in real estate today. Hey, I'm Joshua Cole, RV park investor, dealership owner, and your guide to unlocking smarter investments in the RV space. Over the past few years, I've seen firsthand how RV parks deliver cash flow, flexibility, and growth that most real estate investors are missing. Stick around, because I'm going to give you 5 powerful reasons why RV park investing beats every other real estate asset class out there. And by the end, you'll see why this is where the real upside is hiding. Let's start with the most obvious one, returns. RV parks often generate 10 to 20% cash-on-cash returns. Compared to the 6 to 8% you'll see in multifamily or mobile home parks, that's amazing. That's because nightly or weekly stays can bring in way more revenue per pad, and the cost to acquire or improve these properties are usually way lower than an apartment complex and or single family homes. If you're targeting high yield, RV parks wins hands down. Next, less competition. We all know multifamily is crowded. Institutional money has flooded self-storage and mobile home parks. But RV parks, still under the radar. And most of them are mom and pop owned with tons of value add potential, and you're not bidding against hedge funds. Yet. That means better deals and more room to negotiate. Number 3, recession resilience. When the economy dips, people don't stop traveling. They just travel cheaper. And that's where RV travel thrives. During the last few downturns, RV sales and park usage actually went up. That makes this an asset class that not only survives bad times, it can thrive in them. When it comes to affordability and living or traveling, RVs are the way to go. Number 4, operations. RV parks are low maintenance compared to apartments. You're not replacing refrigerators, fixing toilets, or dealing with evictions. Guests can come and go as they please. You can automate bookings, and your most significant expense? Keeping the grass mowed and the Wi-Fi working. Of course, if you have an RV resort with loads of amenities, the operations gets a little bit more complex. But done right, it will only amplify the bottom line by driving higher prices and additional income generating services. We'll cover that later in another video. Finally, the land and the lifestyle. RV parks usually sit on 5 to 50 acres of land. That's valuable dirt. And depending on the type of RV park, resort, or campground, you can add cabins, storage, glamping, or turn it into a destination. And let's be real, it's fun. You can visit your investment, host friends, and build a legacy business. Try that with a duplex in downtown Houston. But land appreciation is really last on my list of things that excite me about RV parks. Cash flow and cap rates are what wakes me up in the morning with a big smile on my face. But let's go ahead and recap these big 5 that I just gave you. Higher returns, less competition, recession resilience, low maintenance, high margins, and land and lifestyle upside. The big 5 should be music to your ears, but let's address some of the common objections I hear. First, aren't RVs just for retirees? No, very wrong. Millennials are now the fastest growing segment of RV buyers out there. They're working remote and chasing adventure, and the average age of RVers has dropped from 54 to 49 years of age over the last couple of years, and this will continue to drop. Another objection I hear is, well, but isn't it seasonal? In some areas, sure, but many parks operate year-round, especially in the South. Plus, snowbirds, nomads, and traveling workers keep sites full in the off-season. Third, RV parks are too management intensive. Well, they can be, and more so used to be. But with modern property management tools like reservation systems, remote check-ins, and automated billing, day-to-day operations are smoother than ever. Plus, hiring a seasoned on-site manager or third-party operator makes it largely passive. Think of it like a mini hospitality business with higher margins. Lastly, what about zoning and sewer? Well, that's where due diligence comes in. But the truth is, infrastructure is a hurdle in every real estate deal. You just need the right team and a solid plan. And if you're a seasoned developer, you will know this to be true. In my earlier days, I had a $15 million park shut down due to the highway authorities not giving us the highway access we needed. And after a year and a half, we had to sell the property. It still sold for more than $1 million from the original purchase price, so we didn't lose, but it was a bummer. That was really at the beginning phases of me doing a big deal. So yeah, it was a bummer. But hopefully I can help some of you avoid these mishaps by providing some better due diligence strategies. So how do RV parks stack up to the other popular asset classes? Let's go over this. Multifamily, lower returns, higher competition, and maintenance headaches. Self-storage, good margins, but lots of new supply coming online. Mobile home parks, better, but lot rent controls and regulations are tightening and they still don't have the per site value I'm looking for. RV parks, higher returns, scalable, and let's be honest, way more fun. RV parks combine cash flow, land value, lifestyle perks, and low competition. That's a powerful combination. So if you're looking for real estate that actually cash flows, gives you room to expand, and doesn't come with 100 maintenance calls a month, RV parks might be your best move. And I'd love to help you learn more. I really appreciate you. Thanks for watching my channel. Check out my other videos. Learn how RV park investing can work for you.